44 record closes so far this year. That's right. 44 record closes for the S&P 500 in 2024. But what happens next might really surprise you because the evidence is quite compelling. We'll come back and look at that later in the show because first, we want to talk about today. And stocks close at yet another record high in a run up into CPI, which is going to be tomorrow. Stocks are largely higher other than Google and Tesla. Tesla has their October 10th event tomorrow, which will be the robotaxi. And Google has a potentially historic breakup in the making right now. That's why the stock's down. What's interesting to me is that stocks are like at a new record close. I just told you that. We're up by 0.69% on the day. There you go, Elon. But we're only higher by 1 point on fear and greed. So this is getting a little bit peculiar because when we look to our fear and greed heat map here, we see that same stall out here. I think people might be waiting for inflation tomorrow. And this is where I'm getting quite surprised because these FOMC meeting minutes today were not what I thought they would be. It actually shows a robust debate about the size of the September cut. Again, looking back in time. So some officials would have preferred a quarter point cut. So what this really means is that Jerome might have cut a little bit too much, but that's okay, right? He's trying to jump ahead of the curve. Originally, they cut by, they raised by 75 as they were going up, and they did that 3 times in a row. They did 51 times. So the headline, at least, it did not shake the market. But what's really interesting is that all 4 of these things closed higher. S&P, record close. NASDAQ, hey, pretty strong day, right back up to this gap fill. Dollar, closing up by 0.4% at the high of the day. And then finally, the 10-year note, closing at the high of the day after an auction. Whoa, what's going on with the stock market? Those 4 things normally do not go up together in tandem. That is very unusual, unless we're setting up for an everything rally, and everyone wants what America has. Why? Because America is the best place in the world, baby, right? America number 1. Chinese stocks tumbled the most since 2020 on stimulus skepticism. There you go. Want to see a nasty chart? Let's look at this one here. Let's look at FXI. Why? Because we only got 2 more days left in the week. And as of right now, we're not sure if we're actually going to even save a key relative pivot. Look here, 32.8. That's a key relative low. We got 32.5 as the 50 MA, 200 MA, and we got a higher low so far. This is going to be really important for emerging markets because they're getting a push-pull on whatever China does. But investors, they know, right? If you want to invest in the best, forget about the rest, right? Forget the rest, invest in the best. There you go. That would be clearly American. So looking at tomorrow, we do have inflation coming out, and I want to touch on that right now. China stocks, everything rally, right? Everything's going up. And what did not go up today actually tells me that an everything rally could actually be happening. Why? Because the VIX closed down today at the low of the day, which means people are not worried right now. People are supposed to be buying insurance up into CPI, up into the election. That's in less than 30 days. What the hell's going on? And by the way, it's my brother's birthday today, so happy birthday, Calvin, even though I know we don't watch my videos. So if we're in for an everything rally, how high could we go? Stocks are mirroring some of the early days of the history's biggest bull markets. All right, so I should probably show you this. It should be no surprise. We'll look at the first one here. So first one here says, don't give up on the bull market yet. When the S&P is higher by more than 20 record closes at the midpoint of the year, now we're at 44, we're higher 80% of the time for 6 or 10%. And also, when we're higher by more than 10% at the midpoint of the year, same thing, 83% chance we're higher for either 8 or 10%. Hey, that looks pretty good. And we also talked about potentially not liking October, but if we look out 3, 6, and 12 months, 75, and 100%. Those are pretty good odds. I don't want to bet against that. And a lot of investors don't either. I think that right now, everyone's competing to be the most bullish. And what I mean by that, everyone's raising their S&P 500 targets. 61, 6,000, 59, 56. Oh my God. How many days are left for the year? Not that many. So with 27 days into the election and 83 days into the end of the year, how the hell are we going to go all the way up to where they're talking about? Those are very, very big numbers. I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel, I would greatly, greatly appreciate that. So if we know that everyone's getting all bulled up into the end of the year, right? Oh my God, that's 83 days, not 83 sessions. So better start getting to work, boys. And this is where it gets really interesting because I heard on Bloomberg that they're looking for roughly a 1% move on CPI tomorrow. Again, up to, right? So up to 1%. If we get a 1% move, oh boy, where are we going to be? Well, we're going to be at 577 plus 6 points. Let me just pull up the calculator. Let's do a quick little beep boop. 577 times 1.01. We'd be at 582. It's a pretty big number, a 580. Okay. NASDAQ 493 times 1.01 should move more. Basically 500. So, wow. Dow Jones also closed at another record high. So record close, sorry, not a record intraday high, record close. We can see that here by going to a line chart. There you go. So the fact that we have all these things going higher, for me, either means that there's going to be a nasty shock tomorrow. And what would a 1% move lower be, right? Let's just not all get all bulled up. Let's have a look here and see, right? What would that look like? Well, that'd be 571. 577 times 0.99, that would get us to 571. There we go. What about 493 times 0.99? 488. All right. What would those numbers look like now? So if we come down to 571, that would still be a higher low. We open the week at 571. We basically give back the progress that we've made so far. Here's what's interesting. So since we formed our low, we have basically all hollow candles and or green. This one's full, but otherwise they're all hollow, which means there's dip buyers showing up at every opportunity, right? They're like, nah, I'm not going to wait for 520, 530, 540, 560, 570. I'm going to buy it up to 580. Cool. If they want to do that, fantastic. Remember, we have the candle close into the end of the week as well. So if right now, let's look at this, right? We got through a lot of things now. Here's actually what I want to focus on first. So with all this data, like why would the market be going up? I'll tell it to you now in the next 90 seconds, so just hang in there. So CPI tomorrow is going to be coming out again. The estimate is going to be 2.3, but here's the interesting part. We now got another revision to Q3 GDP at 3.2. So 3.2 is trouncing 2.3, 2.4, 2.5. So if this number comes in below 2.5 tomorrow, even if it's a higher number than 2.3, I think it's going to be bullish. This shows a descending rate of inflation, and this would be a cincher on Friday. PPI at 0.1. Man, that's exactly what everyone wants. Soft landing, check, let's go. So here's my concern. All these things look really good, and I want you to think about what could happen next. What could be that really big shock? Well, what do we have going on in the world right now? There's all these black swan potentials, and they can't break the chart. So all we got was yet one more bounce off a previous top, and that was at 565. Think about what's happening in the world today. There's wars happening in more than one location for multiple years. We also have an election coming up in less than 30 days. What else do we got? We got yields above 4. Okay. We got all this debt maturing. We got a lot of other uncertainty. I just named 6 to begin with. So if the market sees all those things and it's just like, whatever, shake it off, let's go up. Well, why are we fighting it? If we look here to the monthly candle on the S&P, it's been a nonstop party going higher. And remember, I was talking about 1995 and people were making fun of me as we were going up. And I'm like, hey, I would really love a dip. Why? I'd like to reset the indicators and make sure I know where support is. I think that's support at 540, but I don't know for sure. And here's something which is really interesting, because at the beginning of this year or end of last year, I was calling for 5,600 and 6,200, the exact numbers that basically everyone's calling for now. So WTF? Like, why are they piggybacking now? Goldman Sachs even says 6,200 for next year. I didn't call these for the year. All I said was that I have a thesis. If the thesis plays out, we're bullish. Let's look back here. Chips lead mega caps, tech lead SPY. What's happening today? Oh my God, NVIDIA. Oh my God, NVIDIA. It stopped going down and it's going up. That's right. This stock, when it goes up, it adds a lot of points to the S&P. Look at these hollow candles here. Another expansion, another expansion. Is this another expansion? Well, history says we're going to go up and we need some leadership. So if Google and Tesla are falling behind, let's see what Tesla does tomorrow with this robotaxi, but I got a feeling we're in for a disappointment. All right. Thank you for tuning in to today's video. If you want to hang out with me at 9:15 a.m. tomorrow, thank you so much. If not, I'll see you on the next video.